Welcome to our training webinar for the annual Mitchell-Lama report. We will discuss the reporting requirements that apply to all Article 2, commonly known as Mitchell-Lama, housing companies under state supervision. The purpose of this webinar is to serve as a guide for you to complete the required online survey. We will also clarify definitions and address common confusions that arise for owners or managers of Mitchell-Lama housing companies as they complete the survey. First, we will provide an overview of this reporting requirement and define some terms that will be used throughout the webinar. We will then proceed to discuss each section in the order they appear in the online survey: development information, rent and carrying charges, admission income limits and surcharges, housing subsidies, mortgages and debt service, and insurance. The Private Housing Finance Law, Section 32B, requires the Division of Housing and Community Renewal, or DHCR, to submit an annual report to the state legislature, attorney general, and controller. The report must include information regarding the operations of every active Article 2 or Mitchell-Lama housing company. In order to compile this report, DHCR requires housing companies under state supervision to complete an online survey to provide required information. Your project's asset manager or housing management representative will provide a link to an online survey on the Alchemer platform. Follow the link to begin the survey. Once you begin the survey, there is an option to save and continue if you wish to pause the survey for later. Click Save and Continue Later in the bottom right corner of the screen and enter your email address. You will be emailed a link to continue the survey where you left off. Throughout this webinar, the numbered bullets on each slide correspond to the question numbers on the online survey. Now we will clarify some definitions that will be useful throughout the webinar and survey, as some survey questions must be answered differently depending on what type of Mitchell-Lama housing company is being reported, as well as which funding sources apply to the housing company. The first is what we will call a standard Mitchell-Lama. These developments have not been refinanced with tax credits. They follow all Mitchell-Lama regulations and set rents through the budget rent determination, or BRD, process. You can refer to the links on the slide for clarification if you are unsure. The next is federally assisted developments. These are Mitchell-Lama developments which receive a federal subsidy through HUD under either Section 236 or Section 8 project-based rental assistance. The final category is tax credit developments. This refers to Mitchell-Lama developments which refinanced using low-income housing tax credits allocated through HFA, DHCR, or HDC. It is worth noting that certain developments may have overlap between these categories if the units have a mix of funding sources. The next definition clarifies the distinction between a rental and a cooperative housing company. In a rental development, the dwelling units are leased to qualified tenants who pay rent set according to the Private Housing Finance Law and DHCR regulations. Additional regulations may also apply if there are other subsidies or funding sources applicable to the development. In a cooperative Mitchell-Lama development, the shares of the housing company are owned by the tenants. Cooperators pay an equity investment at the time of move-in and then pay monthly carrying charges set according to the Private Housing Finance Law and DHCR regulations. Now we will take a closer look at each question on the survey, starting with Section 1, Development Information. Question 1, select your Mitchell-Lama housing company. Every company required to report should be listed in the provided drop-down menu. If you do not see your housing company listed, please contact your asset manager or housing rep. Question 2, enter your contact information. Fill out each field of the contact form. If we have any questions while reviewing your report, a member of HCR's staff may contact this person for clarification. Question 3. Has the development filed a Notice of Intent to Dissolve? A Notice of Intent to Dissolve, or NOI, is a preliminary request made to DHCR requesting to dissolve the housing company. The request is subject to agency review and approval. If you select yes, you will be asked to provide the date on which the NOI was submitted to DHCR. You will also be asked to provide the total number of tenants residing at the development on December 31st of the prior year. This should be your best estimation of the number of all occupants at the development, based on the number of occupied units, size of each unit, and any additional information you have regarding the number of occupants in each dwelling unit. Section 2, Rent and Carrying Charges. Questions 6 through 9 ask you to provide the range of rents or carrying charges, in the case of a co-op, in the development at the beginning and end of the calendar year. The easiest way to determine this information is to use a rent roll as of January 1 and December 31st of the reporting year. Sort all of the unit rents from lowest to highest and choose the lowest and highest numbers. However, if the lowest rent or highest rent is a tenant with Section 8 assistance, then you can proceed to the next lowest or highest unit. Section 3, Admission Income Limits and Surcharges. Question 10, what is the minimum amount of income an applicant must report to be admitted to the development? This question asks you to consider your application process for units at the development. If you have established an income threshold for applicants, report the lowest income you would accept to admit them to the development. Note that this will normally correspond to the lowest rent unit in the project. You may report $0 if the project may accept an applicant with no income in some circumstances. Note also that you should base your answer on a prospective applicant that does not have outside rental assistance, such as Section 8, City FEPS, or other subsidies. Question 11. What is the maximum amount of income an applicant may report to be admitted to the development? As income limits vary based on unit and household size, the maximum income calculation will usually correspond to the largest unit with the maximum household size allowable in that unit. Note that some developments contain units with different methods for calculating the limits. In this case, you'll need to select the highest income limit that applies within the development. The standard Mitchell-Lama regulations provide two methods of calculating the admission income limit. The applicable income limit for each unit is the higher of these two methods. This slide contains the income limit calculations for standard Mitchell-Lama projects. Method number 1 on this slide pertains to rental developments only. Cooperatives will use a slightly modified calculation included on the next slide. In method number 1, you will calculate 8 times the annual rent for the unit if the maximum household size in that unit is 1 to 3 people. If the maximum household size is 4 or more people, calculate 9 times the annual rent. Method number 2, also called the alternate income criteria, is based on the area median income published by HUD. You can find the data at the link provided. This information is also sent out annually in a memo from our Housing Management Bureau. Cooperatives use a slightly different calculation for method number 1. First, calculate 8 times the annual carrying charges for the unit if the maximum household size in that unit is 1 to 3 people. If the maximum household size is 4 or more people, calculate 9 times the annual carrying charges. Second, multiply the unit's equity, excluding amortization, by 0.06 or 6% and add this amount to the prior result. Finally, multiply the number of rental rooms in the unit by $120 and add that to the prior result. Units assisted by Section 236 or by Section 8 project-based rental assistance are subject to income limits published by HUD and available at the links on this slide. Section 236 uses the low income limits, also known as 80% AMI. For Section 8 project-based rental assistance, you should refer to the very low income limits or 50% AMI. Income limits for tax credit units, also known as MTSP limits, are published by HUD and available at the link provided on the slide. Question 12. Enter the total amount of Mitchell-Lama rent surcharges collected in 2023. Mitchell-Lama regulations apply a surcharge on the monthly rent for tenants who earn over the income limit set for their unit and household size. This question is only asking for these Mitchell-Lama over income surcharges. In particular, note that units qualified for low-income housing tax credits should not have any surcharges to report in this category. Section 4, Housing Subsidies. Question 13 asks about the development's property tax exemptions. Select yes if the property receives any amount of property tax relief. If you select yes, you will be asked for the type of exemption. The first choice is pilot, or payment in lieu of taxes. This means that the property does not pay property tax, but does make an annual fixed payment to the municipality. Shelter rent. This refers to a special type of pilot. In this case, the amount paid is determined each year based on the shelter rent formula, which is usually 10% of rental income minus utilities. Lastly, percent reduction. Select this choice. If the property taxes are reduced by a certain percentage, you will then be prompted for the percentage. Also select this if the property is fully exempt from property tax. In this case, enter 100%. Question 16 asks if the property receives Section 236 interest reduction payments from HUD. While this previously applied to a large number of projects, only a few projects still have active contracts remaining. If you enter yes, you will be asked for the annual amount received in interest reduction payments, as well as for the expiration date or the final payment date of the IRP. Question 19 displays a table listing several unit-specific housing subsidies that may be applicable to your project. For each line, enter the number of units currently benefiting from the subsidy. There are three types of Section 8 funding listed. The first is project-based rental assistance. This refers to a Section 8 subsidy which is attached to the project and administered by HUD's Office of Multifamily Housing. Project-based vouchers is another kind of Section 8 subsidy attached directly to the project and administered through a public housing authority. The difference between project-based rental assistance and project-based vouchers can be difficult to determine. The easiest way to determine which applies is to review the HAP contract. For PBRA, the HAP contract should be with HUD, while for project-based vouchers, the contact will be with a local PHA like NYCHA or HTFC. Finally, housing choice vouchers refers to tenant-based vouchers, which are held by the current occupant of the unit. SCRE and DRE refer to the Senior Citizens Rental Increase Exemption and Disability Rental Increase Exemption programs. These subsidies are only applicable to New York City properties. 4% and 9% refer to the two varieties of federal low-income housing tax credits. 4% credits are allocated to projects in conjunction with tax-exempt bond financing and cover approximately 30% of the development cost. 9% credits are awarded to projects through a competitive application and cover approximately 70% of the development cost. Once you identify which type of tax credit pertains to your property, if any, enter the number of units which are qualified for tax credits in the appropriate box. Question 20. How many units receive Section 8 funding pursuant to a RAD conversion? RAD refers to Rental Assistance Demonstration. Many units which were formerly subsidized by HUD's Rent Supplement or Rental Assistance Payments programs have been converted to Section 8 via RAD. These RAD units should also have been included in either project-based vouchers or project-based rental assistance in the previous question, depending on which type of Section 8 was utilized. Section 5 covers mortgages and debt service. Question 21 asks for information about every outstanding mortgage on the property. You may enter up to 6 mortgages. After filling out the information for a mortgage, you can click Add Another Mortgage and a new question group will be added. You'll need to provide the following information for every mortgage loan. Position. This refers to the position of the mortgage in lender priority. In certain cases, 2 mortgages may be considered to have the same priority. Mortgagee. This refers to the lender. Checkboxes are provided for most of the common public agencies holding mortgages in the portfolio. If your mortgagee is not listed here, for example, a private lender, select Other, Write In, and enter the name of the mortgagee or lender. Insured. Select Yes if the mortgage is insured. Common insurers are Sony Mae and FHA. Interest rate. Enter the interest rate of the loan. If the rate is variable over the term of the loan, enter the rate which is currently in effect. Principal outstanding. Enter the amount of principal outstanding on the loan as of December 31st, 2023. And finally, maturity date. Enter the date when final repayment of the principal is due. Question 22 asks about current amortization. For our survey, this is defined as the total amount paid during the calendar year towards principal and interest for all outstanding mortgage loans. Do not include in this figure any interest that was accrued or capitalized during the year, but not actually paid. The final section of the survey is insurance. The final questions, 23 through 27, ask for information about the property's active insurance policies. For each type of insurance listed, enter the name of the insurance provider, the policy number, and the expiration date of the policy. You will need to provide this information for property insurance, liability insurance, umbrella or excess liability insurance, boiler insurance, and fire insurance. If you do not have insurance coverage in any category, you can indicate that by clicking No for that question. We hope that this webinar will help you as you complete the annual Mitchell-Lama data collection form. If you have any questions that were not addressed in the webinar, please reach out to your project's assigned asset manager or housing management representative.